I mean, if you didn't see this coming, like, you know, economic growth is going to slow when you stop pumping trillions of dollars into the system, right? Um, there's a sharp slowdown in consumer spending because we don't have that great influx of money coming from anymore from that fat unemployment, from the stimulus checks. There's a lot of people all getting like there's so many people on that unemployment and that fat unemployment, and that money for a lot of those people didn't go back to like making their life better. They didn't go take a college class. They didn't pay off their Visa bill. It went right to the mall. It went to Amazon. It went to Target. Retail sales were up. That money just got spent. If you know people in the retail world, I was talking to people and I was hearing stories back in 2020 and even parts of this year where the stores were saying, these are luxury item stores, that it was the equivalent of it being Christmas for like 6 months straight. That's how busy the stores were because there was so much money in the system. People were getting so much money on unemployment and stimulus. Well, that's stopped now. What did you think was going to happen? Like, it's kind of funny that this is going to be surprising to some people. The U.S. economy grew at a 2% pace in the third quarter, its slowest increase since the end of the 2020 recession. Duh. Consumer spending and residential investment helped keep the number lower. Ooh. Weekly jobless claims fell more than expected to a fresh pandemic era low of 281. We got a lot of turmoil to work out. People got to get back to work. We're going to have to get used to not having all that extra money, going back to living on a budget, not having a bunch of disposable income. Kids are going back to school. We're working towards getting back to normal again. But whatever you saw in the last 18 months in terms of retail sales, consumer spending, any kind of growth, that was coming from the money that the government injected in the system. Now, keep in mind, it wasn't just that. It is the fact that people are still not paying their school loans because you don't got to pay those. That doesn't kick back up until January. Don't quote me on that because I don't have school loans. So that money that would normally go into school loans is back into the disposable income bracket. So it's probably some of that's ending up back in the economy. You had the people not paying their rent, and there was like 11 million people that were facing eviction from back rent. So you got to imagine those 11 million people, some of them were probably honestly struggling. But if you're getting a bunch of unemployment, I'm not sure where that makes sense for some people. I know from some personal stories that a lot of that money just ended up back in the economy. Instead of paying your rent, the money went to Target, it went to buying a new Jeep. That money went everywhere, but to where it should have went. And then I just saw an article on Bloomberg or something about the mortgage forbearance. And that's going to be coming to an end here. You got all these things that people weren't paying their mortgages, they weren't paying their rent, and they weren't and still aren't paying their school loans. So if you had $500 a month in school loan payments and $1,000 a month in rent, that's $1,500 a month that you had that was just disposable income. Going to Target, going to vacations, buying clothes, whatever it is you wanted to buy. And then if you had that extra fat unemployment, you were maybe getting up to $4,000 a month, but then you weren't paying that $1,500 for school loans and like rent. So you got like $4,000 a month in cash because what were you paying? Maybe your car loan, your cell phone bill, your Netflix bill. You had a very small amount of bills unless you had a bunch of credit card debt. So you still ended up with thousands of dollars every month because you had that unemployment and then you weren't paying your rent and school loans. A lot of that money went back in the economy. As soon as we get off when all the unemployment runs out, and you get the child care credits. I think people are overlooking that. There's quite a bit of money going into child care credits, and that's potentially going to keep more people out of work. And that's going to be some money that's going to get pumped back into the system. For everyone else that you're not going to be on unemployment and the fat unemployment's gone, there doesn't look like there's any more stimulus checks coming, and you have to get back to paying your school loans and your mortgage or your rent, all of a sudden, all that money that was getting pumped in the system is going to evaporate. I don't think you're going to see these retail sales keep booming after that happens. It's just instead of paying money on rent and school loans, we were shifting that over to money being spent at Amazon and Target, for example, or even luxury goods. I'm expecting that to fall once everyone's got to get back to paying their bills like normal again. So I'm not surprised by this. I certainly don't want to see a crash. I just don't know how we can sit back and expect things to not slow down when people got to go back to paying their bills and the influx of trillions of dollars into the economy ends. You have to expect that consumer spending is going to go down, and we're going to get over this demand bubble where we went on this massive consumption spree. We bought everything under the sun. We've taxed the supply chain and manufacturing to the max. Once that big peak is over, and there's a compound issue here. One is we bought a lot of durable goods, RVs, boats, washers, dryers, TVs, bikes, motorcycles, ATVs, cars. We bought everything under the sun, and a lot of these things aren't things you buy every year. You're not going to buy another washer and dryer for 15 years probably, maybe 10. So we went on this buying spree, and we bought, my theory anyways, the things that we would have bought in the next 5 years, we bought them all in the last 18 months. Which means there's going to be a gap in the next 3 to 5 years where things slow down because we don't need to buy anything else. You combine that with the fact that the money supply is going to slow down from stimulus and unemployment, and the reshifting of money that's going to go back to paying rent and back to paying school loans, and that's not going to go into consumer spending. You add all this up, and you can see where the bubble pops at some point. I just think people were really early, and I think, the Michael Burry guy, I'm even saying his name right, shorting, I think he was shorting Tesla and doing this and doing that, and I think a lot of people were just early. They're trying to time it, and they thought that this year was when it was going to pop. And I think we got a little ways to go now. Bubbles always pop. It's just a matter of when. Is it 1 year, 2 years, 3 years, 4 years, 5 years? But I feel there's going to be some point in the next 5 years where all the spending we did caught up to us because we don't need to buy an RV. We don't need to buy the washing machine. We bought that stuff, so much of it now, that there ends up becoming a very low demand for many of those durable goods, and that's going to result in sales going down, layoffs, and then even this next year when we get the full shift of people getting back to normal and paying their school loans and paying their rent, and we see that money evaporate from retail spending, consumer spending, we're going to start to see some more hiccups and some more bumps. So we're going to see what happens, but this is not surprising in any way, shape, or form. It's I know we're about to spend $2 trillion on some new package that might change the game a little bit. I'm just not sure. I think we've gotten used to the last 18 months of very strange monetary policy and some government regulations that have allowed people to have access to money that ended up back in the economy, and that's all going to shift. So if you have any thoughts on that, drop a comment below, and we'll see what you have to say. Until then, I'm going to catch you on the next one.